Everyone, me Kevin here. So a couple of weeks ago, I promised in comment sections that I would make a video showing my losers. Because we talk a lot about new investment ideas. We talk a lot about companies that we're really excited about, like Tesla, Enphase, Amazon, Apple, you name it, Etsy, Affirm, some of these companies that we just absolutely love. We don't give a lot of attention to the ones that we thought we would love, and then they turned out not so loving. So, in this video, I'm going to talk about losers and lessons that I've learned so far in 2021 and mistakes that I vow not to repeat again. So, as with all these losses, there are lessons. And the first that I'm going to start with is one that actually looked like it was going to be the biggest loser of the year, but has actually U-turned, but there's a huge lesson in this one, okay? On April 20th, 2021, I bought a lot of Tesla call options. 1 month later, after I spent almost $2 million on Tesla call options, this is what it looked like. 1 month later, the $2 million in options had turned into negative $955,000. That is, we went from 2 million to like 867,000-ish, about 2 million. This was back when I still owned Peloton, which I sold Peloton. I completely sold out of Peloton at about 113, which I'm really glad I did. But anyway, look at this. These Tesla options, they're absolutely horrible. And some of them are so crazy out of the money and work so crazy out of the money that when Tesla went down to 500, I'm like, oh, this is never going to go to 1,200. This is never going to go to 1,500. And the problem here was I bought these, and this is the lesson. I bought these call options while volatility was declining, but it hadn't hit the bottom of volatility decline yet. Because remember, folks, Tesla or just options in general aren't just priced on what the price of the actual stock is, but what expected volatility is or implied volatility is at any given moment. And so just like with price, the rule of thumb when it comes to options is you want to buy low, sell high. You want to buy options when the volatility is low. You want to sell options when the volatility is high. Unfortunately, I bought these options when Tesla was trading for around $715 a share. And Tesla then ran from fell down to like 550, then came back to like 750 a share. And you'd think, oh, your price is up. Like your options should have gone green when Tesla was at 750 a few months later, right? Nope, because volatility kept plummeting. These options have been red the entire year since about the beginning of October. Now, I wanted to make this video a few weeks ago, which had I made this video a few weeks ago, these Tesla options would have still been pretty red. And I'm going to show some that are still red, some contracts and some investments that I made that are still red. But it's worth noting that I've closed the vast majority of my Tesla options just to show you that all of those have turned green though. Just look at the highest one, the one that's most out of the money. This is the 1725 call. In a matter of 3 weeks, this has now rotated because volatility for Tesla has skyrocketed. This one is now a 92% profit. When, remember in that last picture, it was like a 90% loss. It shows you the insane volatility that you can be exposed to. I was a 67.45% loss there. There you go. But anyway, it shows you the insane volatility that you can be exposed to with options. And a big lesson here is pay attention to implied volatility. If you're investing in options and you're not paying attention to the volatility charts and historical volatility, you're screwed. You could sign up for, and this is not sponsored, but you could sign up for something like Alpha Quarry and you could track this kind of stuff. But pay attention to this. But now I do have some other options that are still in the pooper that are doing very, very poorly. And these are options like my Pinterest options. Take a look at this one. Here's a Pinterest option that I have that cost me $38,000. It's down 94%. Now, Pinterest, I've been wanting to dump out of Pinterest for about 4 months now. But what's really annoying is I fell into this fallacy with Pinterest that it'll come back to 80 and then I'll sell. Well, the problem is I should have just sold when I first realized, which I realized this about 3 or 4 months ago. I'm like, uh-oh, search trends for Pinterest are down. Website traffic is down. App usage is down. All of these metrics were down, which is a really, really bad sign. Those same metrics are the reason why I completely sold out of Peloton. At the same time, I should have sold out of Pinterest, but I didn't. I kept it. Now I'm holding the bags of probably around $200,000 of options in stock of pins. That's totally worthless. Well, it's not totally worthless. I mean, I've got about $200,000 left in it, but I probably lost a couple hundred G's on pins. Actually, I think my basis was around 70, but even though it hasn't halved from 70, options, when they fall more. So, pins has been a loser for me. And while it's a bummer, I'm over it. So, oh well. Now, another one that has been a loser, we're gonna pull that up right now. So, Redfin. Okay, so Redfin has been a big winner for me in terms of shares. I bought in around 10, 20, and 30, and it's trading for around 50 right now. And I bought that all back early in the pandemic. I thought Redfin selling down was ridiculous, especially since I saw real estate going up, not down. But unfortunately, recently, like in April, it was in April. In April, I spent some money on on Redfin calls as well, because I wanted to get out of margin. So I sold some shares and bought options instead. Well, unfortunately, this cost me $127,000, and it's down 43% right now on a Redfin call option. Not so great here. So not super happy about the Redfin call either. So Redfin calls, Pinterest calls, big F basically. I do have this Nio call, which I also bought at a not so ideal time because I paid a massive amount for this contract. And so even though it's a $30 Nio call, I'm actually down $650 on it. So it's basically break even since I put $111,000 into it. But still, it goes to show you, like, I probably bought this call not paying attention to what implied volatility was, and it was probably at a high point, which is a big mistake. So similarly, I have a Lemonade $50 call, but I paid a lot of money for that option contract. In fact, let me see when it filled. This here, let's see, I have 45 of these. This filled, May 12th and April 20th. Even though May 12th was like a poopy time in the market, volatility was up. So again, I got volatility screwed here, but this one's down about 14%. So this just shows you another loser right here. So let's find another one. So sometimes we were expecting an end of the year rally here, but I did sell a couple covered call positions, and those unfortunately are not so superb right now. So take a look here, for example. This is a spot. I don't have all my Enphase and Etsy here since I own probably about 1.8 million of each of these, but this just shows you some of the more recent purchases here. But I did do a covered call on Enphase. I got a $20,000 credit, I want to say. It was a $20,000 credit for Enphase. I believe it was something like that. Yeah, it was. There it is. It's 10 contracts at $21.20. So I got $21,000 as a credit for agreeing to sell Enphase at $210 in January. Now I'm probably going to lose those 1,000 shares. I'm going to get called out. So what I'm going to do, because that contract has lost like 96% of its value, which is not a big deal. Like, I'm not going to sell it at the 20K loss. But instead, what I'm going to do is I'm going to probably sell puts on Enphase since volatility is up a little bit. And so here's how something like that might work to try to offset some of the pain of having a sold call on a stock that's running. So we know volatility's up. I can go in here under Enphase, and I can now sell weekly puts on this thing. So let me go to 240, let's say. So 240, I'm going to sell a put on this thing for $6.20. I got paid $21 per share to sell Enphase at 210. So that puts me at a break even of about 231. If I can go in here and sell a put for 240 and harvest $6.20, that might be worth it. Especially if I don't get assigned on next Friday, and then I do it again. And I just do it week after week after week and farm this higher volatility by selling puts. And worst case scenario, I get assigned, I own the shares, and then those are the ones that end up getting called away, right? Obviously, I know these numbers are potentially a little bit less relatable. Like if I go in here, 240 times 10 times 100, this is $240,000 that I'd be committing to potentially put into Enphase in return for $6. It's not like a huge return. $6.20 divided by 240 is about 2.6%, but I'm also a little bit insulated. It's about $2 more because the share price is about $2 over. So it's really like we'll call it a 3% return to harvest $6,200 here. And worst case scenario, I have to buy these shares next Friday. So this is a consideration. You could also go, let's see, today, that's tomorrow. If it expires tomorrow, I'd get $2,300. If I go out to the 19th, I'd get $10,000. So this would be sort of a way to expose myself to potentially getting more Enphase shares. If it runs, I keep the credit. If it doesn't run, I buy the shares and then I let those shares end up getting called out in January. That'd be a consideration. So this is something that I'm doing to try to solve the fact that I have a sold call that is now upside down. So that's something you can do. Okay, let's go to Robinhood. So I've got some options that have lost money over at Robinhood. So let's see here. Let's go to total return and let's find some. Oh yeah, there's some that have a lot of pain over here. So specifically this one, this is Enphase. Oh my gosh, I got destroyed. So my mistake here was I don't understand biotech. I don't care for biotech. I don't profess to know biotech well or therapeutics. But on Enphase, I'm a YOLO on this one. This is just a YOLO gone bad, okay? What did I put? I put $66,000 into this option on April 20th. So volatility's come down substantially, right? And right now, it says my total return is negative 54%. Wait, if I put in $66,000, how is my equity still $55,000? What's going on here, Robinhood? I don't know, because this order shows is canceled. Oh, 34 filled. Oh, okay, so I paid a lot more than 66K. I probably put in about $100,000 or something like that, and I'm down about 54%. I must have put in like $130,000 into this contract, and I only have about 55K left. So I definitely got smoked on buying a contract here. Again, not paying attention to volatility, but also getting into a stock that probably ran on hype and momentum. So that's been a little bit of a burn, much like CRISPR. Oops, that's definitely the wrong button. Sorry. There we go. I didn't mean to put that up. There we go. CRISPR. $35,000 equity return, down 56% on that one. Yeah, so I learned my lesson on those. That was oopsies. Hippo's down a little bit, maybe $20,000. There's another Redfin call that's down about 22K. Ubiquity down $13,000. That's not that big of a deal. What's another good one? Oh, yeah, this was stupid. So I really only invest in Tesla when it comes to EVs and Nio. And I thought it would be a good idea to buy an out-of-the-money call on GM to kind of have a long-term option, a leap, on their self-driving division, Chevy Cruze. Yeah, well, that was a big F. That one's down 61%. We're down 34K. So these are my losers right now. I'm very grateful that right now I don't have that much in options. In fact, here, let me show you my portfolio. One second. So this spreadsheet right here represents the equity I have left in options. It's about $1.2 million. And the ones that are really red right now are the Redfin, GM, Enphase, Ubiquity by like $13,000, Hippo, tiny little bit, $20,000. AI I just added, and some of the puts are slightly upside down on like PayPal and Pins, but I do have Pins contracts that are down. Yeah, the others are pretty good, but those are some of my losses. And what I've noticed is most of my shares are doing relatively well, with the exception of Pinterest. Most shares are doing really well. So now if I had shares of CRISPR or Enphase, I think those would be doing pretty poorly. But otherwise, my big holdings, my Enphase, Tesla, Amazon, Apple, Etsy, Affirm, some of my most high conviction companies, these are doing very, very well. The same, I mean, Lemonade has recently come up, I think, on the car insurance news. That's been good. Robinhood has not been doing well. That's another one that's been like, man, should have just sold the thing at 70, which is really funny because I sold calls on Robinhood when it ran up to $70. I bought it at like 34, thinking, oh my gosh, it's such a great dip, even though it's at like 36 right now. Ran up to $70, and I'm like, oh, this is perfect. I'm gonna sell calls. I should have just sold the stock. Even though the sell calls, I made like 99% on those, I was limited, and the stock fell more. So I was still down in the fact that I had the shares, but obviously the sell call helped hedge that position a little bit. So that was a bit of a bummer. But Robinhood's been kind of a loser. Robinhood's not been good. Pinterest has not been good. And some short-term plays on some of these therapeutics on options have been a problem. And it's worth noting that if you screw up with options and you don't pay attention to the volatility chart, you're probably going to end up getting killed with options. Options are a great way to lose money really fast if you're not careful. Now, that has led me to take profits pretty liberally and frequently on options, sometimes potentially too early. Like on Tesla, I staggered when I was taking profits. I took profits around a little bit of call options at 950, at 1,025, at 1,075, at 1,100, 1,150, at 1,200. Every time I saw one of these new highs, I'm like, all right, I'm going to sell one of my options. All right, I'm going to sell one of my options. I've still got a few left. I have the one I showed you earlier, and then I have a $700 Tesla call. That one's up like 35K. And the other one's up, what was it, like 100K or something like that. Those are great. I still have those. But yeah, I mean, look, I could have made more money had I held those options longer. But I've been so burned by the idea of how red these options were for how long that I'm like, okay, now I've made money on them. They all turned green. I'm going to take profits. And I think that's something that is really important in investing culture, is for us to realize that if we have options, it's a good idea to take profits because options can move very, very quickly to the downside. And if we're in margin, it's okay to sell to pay off your margin. Right now I'm at 0 margin, and I'm really happy about that. 0 margin, and I've really reduced my options, which is good. I still swing trade with options, but my options position right now is, I'll give you a percentage here so you can get an idea. My options as a percentage of my portfolio, 1.2, works out to about 4%. So I'm 4% in options right now, and in crypto, I'm almost 4%. Almost 4% in crypto. So it gives you a little bit of an idea in terms of my breakdown, and most of that Ethereum, Bitcoin, ADA, right? But this gives you a little bit of a breakdown of my portfolio. Some of the losses, some of the mistakes that I've made. Yeah, if I added up the losses on Pinterest and some of these other options, it'd probably be losses of somewhere around $400,000, maybe even a little bit more. So those are some real losses, right? But fortunately, they're offset by gains in other things, substantial gains in other things. My JP Morgan account, I'll pull that one up really quick just to show. Because sometimes people are like, oh, if you don't show it, it didn't happen. It's like, oh my gosh, there's so much jadedness online these days. Whatever. But yeah, if you look at my JP Morgan, I'll pull this up right here. So this is my JP Morgan. So because people, like, I think frequently people are like, oh, you only make money from YouTube or whatever. People just get jaded. Think just they're having a bad day or whatever. But anyway, you can see here on this $20.6 million account, 13.6 of those are gains. So obviously we're doing something right, which is great. But yeah, that doesn't mean there aren't some loser bets that come along with gains. And if I can learn from the losers and learn from the winners, that's a good thing. All right, folks, hopefully you learned something from this video, and I appreciate you for watching, and we'll see you in the next one. Thanks again. Goodbye.